Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Clayton Gardner, co-founder and CEO of Titan, to discuss the value of actively managed crypto strategies. Clay, it's great to have you with us. Welcome to Trade Talks.
It's a pleasure. Thank you for having me.
And Clay, it's so interesting. It seems to be that actively managed strategies, particularly what we've seen in a volatile market environment, whether it's crypto, equities, fixed income, really seems to be the key theme right now. So where are you finding the value of actively managed strategies as it applies to digital assets?
Well, it's a great question because I think over the last few years, you've seen more and more retail and then institutional adoption of crypto. But we think we're still such early days. And even if you look at how many of the ways you can get invested in crypto today, you can buy Bitcoin, you can buy perhaps ETH, maybe even like a passive market weighted crypto index. But a lot of the upside in our view is happening at the longer tails. So like some of the layer one blockchains, but also a lot of other interesting projects. And so the value of actively managed crypto in our view is one, being able to be tactical and manage through really volatile periods like we're seeing on days like today in both equity and crypto markets, being able to hold cash at some points in time and also swing capital back to Bitcoin, ETH, or other coins tactically based on news flow, events, catalysts. And so at Titan, our team does that for people. So as opposed to having to follow Twitter, follow Discord, be in Telegram groups, and try to navigate those choppy waters yourself, you can sort of outsource that to our team that is in those groups doing that work behind the scenes, giving you that exposure in an active way, which we think is really important in a market like crypto where the tide can turn so quickly.
And it's so interesting, Clay, because when we think of younger retail investors, whether it's millennials or Gen Z, they typically tend to be more social media and message board focused, certainly more self-directed. But you're seeing that within the first quarter, particularly with volatile markets, that they are turning to more active managed strategies.
That's exactly right. And I think there's a saying that, for example, in the hedge fund world, which is also often associated with active management, that hedge funds don't aim to outperform in boom times where they really show their muster is in busts, right? And I don't think this is necessarily a bust, but it's certainly a volatile period. And so being able to hedge, being able to have short exposure or even hold cash strategically and say, you know what, there's a lot of ups and downs in the market. I'm totally fine holding some dry powder to be able to buy, whether it's equities or digital assets at perhaps even more discounted prices in the coming days or weeks, is a real advantage that active managers have, where if you're just an ETF or a passive mutual fund, you don't have that. So for example, just in the last few months, the ability to hold cash during a volatile period, we started trimming some of our higher growth holdings across equities and crypto assets back in November, December, holding that cash and then being able to buy some of the securities after they're taking material drawdowns and dips has been a real value add for us and for our clients.
So explain to me more where Titan fits in the digital asset ecosystem. Are you actual asset managers, or what's your role within the space?
So if you think about crypto, I like to think there's three jobs to be done in investing. You're either a self-directed, I'm going to go to Coinbase, I'm going to have a MetaMask, plugin, and I'm going to go solve this crypto thing myself. I'm going to go figure out which digital assets to buy, sell, and when. So that's one camp. Then you have a passive camp called a do it for me. I just want to own the S&P 500 equivalent, whatever that is in crypto. Give me a little bit of everything. That's sort of the second use case. The third use case where Titan comes in is if you want to actively participate in crypto. In other words, you aspire for more than average, which you'd get in an index fund, but you don't have the time or resources to do it yourself, i.e. you don't belong in that first camp. You come to Titan and you outsource it. And you think about us like your outsourced CIO, Jill, which is like, we have a team of crypto analysts and equity analysts here who's doing that heavy lifting behind the scenes so you don't have to.
And just a general outlook in general, Clay, as you think about the crypto space, because, to your point before, where it's not even just digital assets that are volatile right now, it is, every global asset class for the most part. And, the digital asset space is still so young. So inherently it's going to have, more volatility in it than, let's say, a more mature asset class, such as fixed income or equities. So when you think about it, longer term out, what are your thoughts there?
I think the event path will probably vary. And so, for example, today you come into Titan, you opt into crypto. So clients have to opt in and say, I came in for equities, but I express interest. I'm interested in showing what the Titan crypto offering could look like. We recommend typically 1 to 5% of someone's wallet with us. So definitely the minority. The reason is, one, statistically, you look historically, that's actually added quite a bit of healthy Sharpe ratio improvement and volatility reduction to an overall, even an equities fixed income portfolio. But two, there's so much upside in our view of the digital asset space. Even 1, 3, 5% can make a meaningful difference. I mean, if you just roll that back 3 to 5 years, a 1% allocation to even just a simple Bitcoin ETH pair would have done wonders to a portfolio. So our view is looking out 3, 5, 10 years, assuming you're okay with that volatility and the risk, and it is absolutely a risky space, and there's a lot of speculation happening throughout the space, having some sliver of your wallet invested with a manager, of which we obviously think Titan can do an outstanding job, could do wonders for one's portfolio. But the event path will be rocky, as we're seeing on days like today. Will not be a straight line up and to the right.
All right, Clyde, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.